Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the charts to take a look at altcoins that might be really good buys in 2022. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe. Tap the bell, select all notifications, and in doing so you will not miss another video here at Cheeky Crypto. And of course, if you haven't yet joined us in Discord, links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out today. Okay guys, let's get into this, right? So what we're going to do is we're going to load up this into a bit of a split screen to start with, because there are several altcoins that we talk about relatively frequently on the channel, right? We obviously talk about Bitcoin every day as it's a market leader, trying to just understand where Bitcoin is going as it's ultimately going to drive the rest of the altcoins in that direction, right? This is a simple fundamental thing of crypto that I think most people are pretty comfortable with. However, there are some altcoins that have dropped down very, very significantly to points where it's arguably their bear market lows. Okay, some of them still have a little bit way to go. Some of them are definitely right in the sweet spot for accumulation. I'm not going to go through a few in this particular video, but I do go through a lot more on the channel and in Discord, so why not check that out? But we are going to take a look at a few. We're going to start things off with some of the more common ones that we kind of look at relatively frequently, and then we're going to jump into a few others as well. So we'll start things off with Cardano. Okay, so Cardano is of course a coin that has a lot of I guess hate or positivity, really depending on which camp you sit in. Now, essentially, Cardano, I think, is going to be one of those kind of projects that you kind of want to be paying attention to, specifically over the next kind of couple of months, as their hard fork, which is going to be put out in June, is basically a bit of a game changer in terms of scalability for the network. So something that I think is we're starting already to see with institutional players buying up the dip for ADA, that essentially might actually mean that there's some serious potential moving to the upside in the coming months, really, for Cardano. So I think it's going to be interesting, not necessarily just because of the hard fork, but again, because of the projects that are going to be building and releasing on the ecosystem. And ultimately, that's going to drive further adoption. So here we can see that we're actually moving up, right? So the opportunity to buy isn't necessarily right now, but I do think it's going to be coming once we actually have this pullback coming down lower. Okay, so on this hourly chart for Cardano, I am kind of targeting anywhere between 68.5 up to about 74.2. It's a little bit unknown because Bitcoin's in a kind of state of I guess stagnation. It doesn't really generally know exactly what's going on. So for Cardano here, it's somewhere between those two numbers. And, we are currently trading about 58, and there's some short-term trading opportunities, I'm sure, but really that's not really what this video is about. This video is all about, I guess, the regular retail investor just looking to dollar cost average, where are these kind of sweet spots and what projects might be ready to kind of see that growth. So let me come back into ADA here. Let me actually just get rid of that tool for a sec. And we just kind of zoom out into the 4 hour and we just bring this back down. I do think that there's potential to come down towards our 30-cent low. Okay, you can see that there's a C wave down here. This actually puts it about 90% retracement from the previous all-time high and is pretty much aligned to basically a 1-to-1 ratio with the A and the C wave. Now, this is just the most common area. There's no guarantee that that is going to play out or going to happen. But it's also possible that if we do hit these higher ranges that I was just talking about on the hourly chart, that we actually end up with the sub wave counts also indicating around that 30-cent low. So this would be pretty much aligned to Bitcoin pulling down into those significant low areas, right? So basically Bitcoin pulls down to $23,000 approximately, or $22,000. That's really where I see ADA then dropping down to 30-cent. Now that 30-cent low for ADA to me just seems like the best place to be dollar cost averaging, or trying to get the maximum squeeze out of your dollars, right? It seems to be that kind of area for the everyday regular retail investor. Now, of course, I've often said if you're below 80% of the previous all-time high, most retail investors aren't really going to notice all too much difference by dollar cost averaging from 80% drop to 90% drop, right? There's not actually going to be a huge amount of notice for the regular everyday investor. However, if you're investing a few $100,000 or let's say more than $10,000 into ADA, you'll probably notice a bit more of a significant increase for going from 40 cent to 30 cent, right? You're going to notice a fair amount additional coins in your portfolio. But if you're just throwing a few $100s, I generally don't think it's going to matter too much. It's almost better not to deal with the stress of trying to jump in at the market at the right time and just start dollar cost averaging less than 80% of the previous all-time high, under the assumption, of course, that that it's likely to go down lower at some point. And if you have a few extra $100, you can keep throwing it at it and you'll eventually lower your average price, right? And so that's kind of what we're talking about. So first of all, Cardano here, I'm thinking about 30 cents seems to make sense for the low points, right? So that's kind of the first one. I don't want to go into too much technical details. I want to kind of get through as many of these altcoins as I can for you guys, so you can kind of get a good idea as to what I'm thinking. We'll go into VeChain next, another one we talk about on the channel pretty much every day. We get the occasional exception where we don't necessarily cover it every day if there isn't actually too much to talk about. So obviously it's very, very messy chart here on the 4-hourly. We'll just jump into the hourly chart. And as per the kind of the technical analysis on VeChain that we were talking about previously, we came down to a 2.858. We are looking to actually move up towards 4 cent, although Bitcoin's causing us a bit of an issue here with seeing this, but we could be in some kind of B-wave triangle, I guess, if we were to take a look at it as some kind of move like this, and we were to kind of take a look at it potentially kind of forming into some kind of wedge pattern here. The danger, of course, is that we don't go up to those high zones, and that is all because Bitcoin decides to go down much faster. So, we'll talk about that, but essentially, I'm still thinking now is not the optimum time to be buying unless you're, just a regular retail investor looking to dollar cost average, right? So really the opportunity for VeChain actually comes a little bit later, as I think aligned to Bitcoin going down to about that 23K again. Basically, we have down here a 1.77 to 1.8 cent VeChain, right? So that's really where you're going to start to see the significant gains to be made on the portfolio in a very similar way to what Chris and I did way back. So if we actually bring this up into our daily, we were buying way down into the half-cent range. So we're buying up here, we're buying this dip, and then we basically just let it kind of ride up here. So as we kind of pull back down into these low ranges, we are talking about 93% reduction from the previous all-time high. Okay, so significant reductions from all-time high, and right back to almost where Chris and I were buying it, way back in March of 2020, riding it up into the highs of August 2020, which was, I think, about about 2.2 cent, which was a fantastic all-time high at the not all-time high, but a fantastic high at the time, and then pulling back down and going up into new all-time highs after that. So essentially, these are some really good rates. Typically, you drop down to maybe 95%, but again, you're splitting the hair at that point. And to be honest with you, dollar cost averaging, as I said previously, below 80% for the most part, regular retail investors are going to do incredibly well. Of course, if you're throwing serious cash at it, then probably waiting a little bit longer isn't going to be too bad. But of course, do understand that there's always a chance that the market reverses on us very, very quickly, and nothing is set in stone. Okay, let's jump into another altcoin then. So obviously we've got ADA and VeChain out of the way. Let's jump into Harmony One, another one that we really like on the channel. But let's go ahead and make this a little bit bigger and just collapse that down and jump into our hourly chart. Again, we are talking about slight moves up here, but we have to watch out for any invalidations of these lows. Okay, so there's the potential of pushing up to about 7.3, but going to 7.3 would invalidate the low points that I also have marked out. So there's a possibility here that if we do move up in a significant way, that we actually will have a different corrective pattern and therefore different targets. If, however, we keep it below 6.953, then essentially we should be looking to come down into these low ranges for accumulation. Okay, so again, depending on how Bitcoin behaves here depends on how high this thing is likely to push up before falling back down. Again, we are in that 5-wave structure in the same way that Bitcoin, so I would be looking for 5 waves to come on down into this move. So essentially here we are talking about moving the price down to about 1.9 to 2.6 cent. Okay, so again, for me personally, I would always be looking at the upper end of that spectrum, not the lower end of the spectrum. I always like to make sure that I secure my positions before and if it goes down lower, that's fine, I'm okay with that. But for most retail investors, again, I don't think it generally matters too much whether you're dollar cost averaging now or dollar cost averaging later. But if you are throwing serious cash, as I said before, then you want to kind of make sure that you're doing that with maximum kind of gains potential, right? You want to make sure that you can get as many coins as you possibly can for your cash. If you're throwing a few $100s, I don't think it really matters all too much. But essentially, if you're throwing in tens of thousands then and hundreds of thousands, then yeah, you're going to be wanting to watch out for that, in my opinion. So yeah, just kind of watching out for that. We have that potential to invalidate it and push on back down. As I come up into our daily here, you can kind of see that we are going to be tracking down. If we come Actually grab the right thing there. If I grab this one, if we actually do come down to that 2.6 cent range, we are talking about 93% reduction from the previous high, okay, the all-time high. And if we do go down to 1.9, you're talking about 94%. These are truly the bear market lows, in my opinion, because this is where, historically speaking, most of these altcoins have truly bottomed out. 95%, you haven't really seen many go down lower than that. And again, generally speaking, from a retail investor perspective, you don't generally mind too much about there's a few additional extra points. Basically, you want to accumulate positions and let it ride for a significant period of time. So hodling strategy, dollar cost averaging at these low points just makes sense, at least to me. But it is it's actually worth noting here that I'm not a financial advisor. I cannot offer you financial advice. I'm just giving you my thoughts and opinions on the charts and the data as I see it. So make sure you do your own research and all of that kind of good stuff. I definitely don't invest on anything I say or do in these videos. It's important that you make your own decisions, right? Let's jump into 𝗕𝗘𝗪𝗧, another channel favorite here. A lot of people have kind of jumped back onto 𝗕𝗘𝗪𝗧. We used to talk about 𝗕𝗘𝗪𝗧 for a long time, but YouTube views just declined to the point where it wasn't worth the energy of creating the videos for it. But we have kept up with all of the output of 𝗕𝗘𝗪𝗧 into the Discord server, so hence, join, because you're going to be kept up to date with everything there. But yeah, it has picked up a little bit, so let's jump into this. All right, I'll bring this back into our hourly chart here. So 𝗕𝗘𝗪𝗧 has been on a bit of a directional move, right? We almost hit the all-time high with this really nice impulsive structure going up, right? It was a really good impulsive structure, and I want to keep this structure. This structure here is very, very important to my future projections on 𝗕𝗘𝗪𝗧. Without this structure, basically it does mean that the future of 𝗕𝗘𝗪𝗧 has big question marks around it. Okay, but under this structure over here, from a technical analysis point of view, it's very important that we understand that this could mean really big gains in the future for 𝗕𝗪. And I only really mentioning this now because we are very close to invalidating this structure. Okay, so as we come up to the here and the now, we actually have invalidation that would get achieved at 3.317. Okay, so we have to make sure that we stay above 3.317. If we fail to do so, then essentially that means that we have a big question mark and we have to do some recounting to figure out what structure is going to be good longer term. With that being said, though, we should also acknowledge, if I bring this up into our larger time frame here and just bring in the all-time high, if I can grab hold of that. Come on. You're not going to do it, are you? You're going to make me zoom in. There we go. Okay, all-time high down to our low point. Now, if we actually take this all the way down here, we can see that it's 87% pullback, which means it hasn't necessarily entered the realm of true bear market low points, right? Because it means that we'd have to invalidate that structure and we'd have to go down significantly lower. So that would be, really hard pill to swallow, I think, for many, because it would mean that you'd have to break the structure down and you'd have to have a different pattern. It's more likely no longer going to be an impulsive structure, but more of a zigzag pattern going up higher, which means it has an upper limit on where it is likely to go. Okay, so really important that we understand that what we want to achieve is to keep above 3.317. However, if we don't, then actually it's more likely just to be a zigzag pattern with another 5 waves going up, and that being the end of insane kind of gains for 𝗕𝗘𝗪𝗧. I still think they're going to be fantastic gains. It just means that we have a little bit lower to go, which means optimizing for potential gains isn't quite where we are yet, and all of that kind of good stuff. So let's jump back down into this, right? Let's jump into our hourly. So as I said, right, we have the 3.317. This would invalidate that third wave going higher. And so we want to stay above that. But if we do lose it, it just means it's a zigzag rather than an impulsive structure going up. And then, of course, that means we have limited amounts of movement to the upside. So on that note, we obviously could invalidate this fifth wave down low in terms of a big kind of zigzag pattern over here, which would come in at 7.098. Okay, so if we were to push up higher in line with everything else in the space, we want to watch out for 7.0, because it would mean this accumulation zone isn't right and it isn't valid, and we'd have a different accumulation zone under a different structure later. If, however, we stay above 7 and we stay above 3.317, then we're actually doing pretty good, because the accumulation zone really is a 3.217, which would invalidate our low, and of course 3.618, which would keep our structure intact. So this is kind of what we're looking at. We're looking at significant drops from the previous highs, and this is a good dollar cost average opportunity for people who are interested in 𝗕𝗘𝗪𝗧, but it's definitely going to be interesting to kind of see if we can keep hold of the structure or not. If we lose the structure, then do expect some lower lows, and essentially those are going to bring in some fantastic deals and more better dollar cost average opportunities in the future. If we hold this area and we can stay above 3.317, then actually we will be looking for reversal structures of impulsive nature, and we're looking for a really good move to the upside. I do anticipate that the third wave high would put us at approximately 90 or so cent. Before seeing another kind of corrective move down. So we would be looking at some pretty impulsive action if we were to keep above 3.317 in my opinion. Okay, so that was Zilliqa, right? We have the accumulation zones kind of marked out there. But let's jump into something a little bit different. Let's scroll on down here. Let's take a look at 𝗂𝗂, one of the channel sponsors here. Let's zoom this in here a little bit and see what's been going on, because we have actually pulled back down in a really significant way. If we take a look at this from a daily perspective, you can see that since launching here on FTX, in terms of data wise, I haven't got a huge amount, but you can see that we are still tracking in a very similar way to the rest of the market. Now we can argue that this is impulsive in its nature, and we're looking to complete the final fifth wave low before getting a reversal. So what I mean by that is we have 1, 2, 3, 4, and then 5. Now what we want to do is we want to check to make sure that we're not invalidated, which we're not, as in wave 4 cannot cross wave 1. That's all good. And we have 3 clear waves going up into wave 2. We have 3 clear waves going up into wave 4, and we are looking for these 5 wave move in here, and here, and here. So wave 1 has 5, wave 3 looks like it has 5, and wave 5 looks like it's in the fourth wave going down into the fifth wave lower, right? So that's kind of what we're looking at on the macro. Now, if we go ahead and actually take a look at this, so that's our fifth wave coming down here. We have the fourth wave. So what we want to do is we want to just check a couple of things, right? Because we have some low points, if I can get hold of that right there, up to the high point here. Okay, so we can see that we're getting an overextended fifth wave, okay, which basically means that you end up with a 5-3-5-3-5 structure inside there, which basically means we're not finished yet because we're looking like we're in a fourth wave corrective move. So there's a little bit of a bounce here, a little bit of a cooling off after the market completely tanked, right? And if I can get this, which I can't seem to, I might have to just zoom on in here. And what I'll do is I'll measure out the distance on this low point just here and up to that high point there. Let me just actually get that on the right candle. There we go. So this essentially then shows us moving down to the most probable range, right? So our accumulation for 𝗂𝗂 does actually come in right at these lower levels, right? So as I come in here and we actually go ahead and just put these on, it's about 25.50 right there. Okay, and then on the higher end of the spectrum, we've got 75, so 30.75. So that seems to be the most probable area. But again, when it comes to these measurements, the subwave counts will always outweigh what the macro does. Okay, so if you've got 5 subwaves inside your 5 wave and they go down lower, they will be the key one to watch out for. Okay, so in terms of 𝗂𝗂, that's kind of the level that we're looking at here, and then we'll be looking for a reversal from there. Now again, if I were to put this up into our daily and we were to zoom this back down, we would go ahead and take a look at the drop, the price depreciation here, if I can grab that from the top there, down to these theoretical low points that we're talking about, 25.5, then essentially, if I can get it, it's going to be, I'm going to have to put it there, about 96%. So right in the sweet spot for accumulation. As I said, right, most altcoins, they go down to about 95% reduction from their previous highs during these bear market scenarios. So a lot of this, you'll be thinking, well, how can the altcoins be down at like 96%, 90% when Bitcoin's only dropped down 50%? And I think this is because Bitcoin is on a different structure. I think the Bitcoin bear market lows are vastly different now to what they have been previously. Previously, we were talking about 86% or 84% bear market lows for Bitcoin. However, it's actually now holding out quite well around the 60% level. So it's going to be interesting to see whether that is all to do with the institutional level of adoption, the whales that are constantly accumulating. They're actually preventing it from going down all to those lows that it had historically gone down to before. And also, you've got to bear in mind, it's incredibly close to its previous all-time high as well, which historically speaking, Bitcoin's never done before either. So this has basically allowed the altcoins to bleed out really, really hard and down to these bear market low levels. Now, it is possible that Bitcoin goes down significantly lower. It's always something that we should acknowledge, right? It's a possible scenario. I don't think it's probable, but I do think it is possible. And as a result of that, you could see something that was never been seen before in the history of crypto as well, with these altcoins going down 99 or so percent, right? And again, it hasn't happened before, doesn't mean it can't happen again. So we should be really open to the idea of what's potentially going to happen. What I think is the most probable is kind of, an upwards swing is imminent. However, there are these wild cards, these things that can happen in the market, and we should be prepared for those as well. But I think for the most retail investor, I don't think it generally matters. As long as you've got a long enough time horizon, you should be pretty good on long-term thinking. But let's jump into something else. Let's take a look at Chainlink. I own far too much Chainlink, and it really has affected my portfolio badly because it is an incredibly volatile asset. Okay, so we'll take a look at this because I really do like Chainlink, but at the same time, it is so volatile that it does have sometimes it can have negative impacts on your portfolio. With that being said, though, that same volatility that has that negativity is also something that shows you with some significant gains, right? So before I jump into kind of the accumulation points for this one, just take a look at here. We can see that we have swings of 69, 50, 43, 35, 74. And when we have these huge swings of 74% pullback down, we've had 172% back up again. We pull back 60, we go up 86. We pull back, we push up, right? So the volatility with Chainlink is great, but it's there because of the use case of the token. It is basically designed to be paid for, to pay for on-chain analysis, right? So basically, if you're looking to bring in real-world data on-chain, you're going to be using Chainlink to do so. We're using their oracles, and you pay with Link to do so. So essentially, with over 1,000 integrations, I think long-term Chainlink is going to be fantastic. But I do own too much. I clearly need to rebalance because I've got too much of my portfolio into this, into this volatility. However, with that being said, there's some fantastic opportunities that do come when you have these really, really low pullbacks, and there's significant swings to the upside to be seen. So obviously, I just wanted to kind of start off with that Chainlink is great. It has a great use case, and obviously, as demand goes down, Chainlink goes down, and as demand goes up, Chainlink goes up. Okay, so not really to do with price movements of upward swings, but as DeFi really kicks off again, you're going to see the requirement for price data on chain and you're going to see Chainlink just basically soar because of that. So as we start to think about more DeFi applications coming on board, you're going to start to see more volatility, but positive volatility instead of negative volatility. So let's jump into this, right? And the accumulation zones here for Chainlink, I still think we're going to push up a little bit. We might hit $9 if we're lucky, if everything kind of moves up with Bitcoin. But after that, I am taking a look at some key areas down here, right? So assuming that we hit that $9.38 level high, then Chainlink, in theory, we could be all the way down here at $3.99 to $4.88. Okay, it seems absolutely crazy, but again, I'll just put this into perspective on where we were. So if we do push up there, we're talking about a 69% push up higher. And then, of course, from that high, we'll be looking at pulling back down about 40 or so percent on the kind of optimistic side. If we're pessimistic, then we're talking about 57%, right? So the volatility is real. You can take advantage of these as you will, but I do think accumulating more Link down here isn't a bad idea, just based on the fact that I think you're going to be at the bottom of the volatility, ready for a positive swing to the upside. Now, if I bring this up into our daily, we can, of course, acknowledge these low points and what this might mean. From the previous high or the all-time high just up here, if I can get it, there we go, we can come down. Let's just say, hypothetically say we go to the 488, that's a 90% reduction. If we go down to the 399, we're talking about 92% reduction from the previous all-time high. So these are some fantastic opportunities to potentially be taking advantage of the market, right? We are in these sweet spot of these low points where you want to be accumulating as a retail investor using a dollar cost average strategy, in my opinion. But as I said earlier, I am a retail investor. I'm not a financial advisor. I can't give you financial advice. I can only give you what I'm kind of looking at this market and thinking personally. And I'm looking at this thinking 90% reduction from the previous high. And yeah, this is exactly where we were back in March of 2020, looking at the market and thinking this is the opportunity to jump into it, right? We've all been talking about bear market lows and the bear market strategy on the channel for a while, specifically in Discord as well. And, we want to be kind of saying to people that although there's a lot of fear out in the space right now, lots of uncertainty, but these are the prices where you can really take advantage of the situation. This is where Chris and I were at back in 2020, dollar cost averaging fantastic positions at 90% reductions from previous all-time highs. And as such, we were able to build really good portfolios for what came after, which was a fantastic surge to the upside. Matic, for example, went up 42,000%. Harmony 1 went up 18,000%. VeChain 18,000%. There were so many fantastic gains to be had and so many different altcoins. So I'm not going to go on to any more. I've kind of rambled on for about 25 minutes now, so I will leave the video there. Join us in Discord if you're looking for more analysis on other altcoins. Essentially, majority of them are in really good positions for accumulating as well. So why not go ahead and take a look at what is actually out on the channel already. Join us in Discord, have a look at other analysis, other altcoins, and really try diving into the space, because now seems to be the time to do it, in my opinion. If you found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.